week is coming to an end, and we take a peek at what next week has in store for the markets. On the monetary front, we highlight the release of ECB's interest rate decision on Thursday. As for financial releases, we start on Monday with Japan's July current account balance and Q2's revised GDP rate from China, August inflation metrics, and Eurozone September Sentix index. On Tuesday, we get Australia's consumer sentiment for September, China's August trade data, UK's July employment data, Sweden's GDP rate for the same month, as well as Norway's and the Czech Republic's August CPI rates. On Wednesday, we get UK's GDP and manufacturing output growth rates for August. On Thursday, we get New Zealand's electronic card retail sales, Japan corporate goods prices, and Sweden's all being for August. From the US, we get the weekly initial jobless claims figure and the PPI rates for August and Canada's July building permits growth rate. We'll make a start for the USD by noting that the US August employment report with its NFP figure is still to be released later today and could alter the greenback's direction. On a fundamental level, we note that negotiations between the US and China for a thawing of the tensions in their relationships are ongoing, and the US is expected to set another senior official to China's top annual security forum in mid-September. A possible improvement of the US-China relationships could weigh on the USD, as it could create safe haven outflows for the greenback. On a monetary level, the market's dovish expectations tend to intensify, and it's characteristic that it increasingly prices in a double rate cut in the September meeting. Fed fund futures currently imply a probability of 45% for such a scenario to materialize. On a macroeconomic level, we note that the ISM manufacturing PMI figure for August, despite improving, showed another contraction of economic activity for the sector, thus stoking worries for growth. In the coming week, we highlight the release of the US CPI rates for August, and should the rates accelerate or even show resilience of inflationary pressures in the US economy, it could contradict the market's dovish expectations, forcing the market to reposition itself and thus providing support for the US dollar and vice versa. On a fundamental level for pound traders, we know that the UK government plans to deliver a legal reform in employer-employee relationships. The government's employment rights bill seems to enhance workers' rights and introduces additional regulation in working relationships. In addition to that, the UK government is also reported to plan introducing regulation in renting properties. The Renters' Rights Bill is to remove the threat of arbitrary evictions and not allow landlords to make discriminations against families with children, as per Reuters. Such regulations could weigh somewhat on the pound. Also, the possibility that the UK government may cut winter fuel payments for pensioners does not pose well for the Labour government, indicating a tightening in fiscal policy, and could also weigh on the pound. On the monetary front, we note the market's expectations for BOE to take a breather in the next meeting and remain on hold and continue cutting rates from November onwards. Such market expectations could provide some support for the pound, given the market's expectations for ECB and the Fed to continue or start cutting rates. On a macroeconomic level, in the coming week, we highlight the release of the UK GDP rates for July. Should the rate accelerate, we may see the pound getting some support, as it would imply a faster expansion of the UK economy. Should also the industrial output or the manufacturing output growth rates accelerate for the same month, the bullish sentiment for the pound could be enhanced. We also note the release of the UK July employment data, and a possible tightening of the UK employment market could support the pound and vice versa. On a fundamental level, we note for JPY traders that inflation-adjusted wages rose for a second consecutive month, July, albeit at a slower pace. Overall, the growth of wages tends to support the resilience of inflationary pressures in the Japanese economy and strengthens the possibility that Bank of Japan may hike rates in the coming months. Currently, as be JPY OIS, the market seems to be pricing in the possibility of the bank remaining on hold in its next meeting in September, but also in October, and hike rates in the December meeting. Furthermore, BOJ Governor Ueda was reported by Bloomberg stating that the bank will continue raising interest rates should the economy and prices perform as expected by BOJ. The comment was perceived as hawkish by the market, providing additional support for JPY. Overall, we tend to view BOJ's intentions towards its monetary policy as maybe the main factor behind JPY's direction. Also, hawkish market expectations tend to weigh on carry trade with the JPY on the short side. Should market expectations for a possible tightening of BOJ's monetary policy intensify, we may see JPY getting some support. On a deeper fundamental level, we note the dual nature of JPY as a national currency and at the same time as a safe haven. Should we see market turning more cautious in the coming week, we may see JPY getting some support and vice versa. In the coming week, the main issue for Euro traders may be ECB's interest rate decision. The bank is widely expected to cut both the refinancing and deposit rate by 25 basis points. Euro OS imply probability of 99% for such a scenario to materialize, rendering the interest rate part of the decision as an open and shut case. The market also seems to expect marginally that the bank is to remain on hold in the October meeting and deliver another rate cut in the December meeting. Should the bank deliver next Thursday a rate cut as expected, we may see the market's attention turning towards ECB's accompanying statement and especially ECB President Lagarde's press conference a bit later. Bearing in mind that the market expects at least one more rate cut until the end of the year, should the accompanying statement and or the press conference maintain a dovish tone, enhancing the market's expectations, we may see the common currency weakening. On the contrary, should the bank show hesitation towards further easing of its monetary policy, we may see the euro getting some substantial support as the markets may be taken by surprise. On a fundamental level, we note that on the political spectrum, the delay of Macron to pick a new PM for France tends to promote uncertainty for Euro traders. At the same time, the local elections in the former East German states, where the far right made a decisive and impressive win, far left parties strengthened, and the ruling party sunk, also tends to intensify uncertainty for EU's political outlook, which in turn could weigh on the single currency. On a macroeconomic level, we note for Aussie traders that the GDP rate for Q2 edged lower, signaling a slowdown at which the Australian economy grew. In the coming week, there are no major financial releases on the calendar from Australia, yet we note the release of September's consumer confidence and August's business conditions and confidence. A possible improvement of the indicators' readings could provide some support for the Aussie. On the other hand, we also got China's Caixin and NBS manufacturing PMI figures for August in the past few days. The releases tended to send out mixed signals for economic activity in the Chinese mega manufacturing sector, which may not pose well for Aussie traders as they maintain doubts about exports of Australian raw materials to China. In the coming week, we highlight the release of China's August trade data, with Aussie traders keeping a fixed eye on the import growth rate. A possible acceleration of the rate could provide some support for the Aussie, yet on a deeper fundamental level, we also note that an escalation of tensions in the US-China relationships could weigh on the Aussie and vice versa. On a monetary policy level, the market seems to expect the bank to maintain rates unchanged until December, at which point RBA is expected to proceed with a rate cut. RBA Governor Michelle Bullock seemed to be even more hawkish in her speech on Thursday, as she warned that some Australians may have to sell their homes and that no rate cuts are likely in the near term. Overall, RBA's hawkish intentions may continue providing support for the Aussie, given that other major central banks intend or have already started to cut rates. As for the CAD, we note that Canada's employment data for August are still to be released in today's American session and could significantly affect the loonie's direction. Should the data point towards a tightening of the Canadian employment market in contrast to July's data, we may see the loonie getting some support. On a monetary policy level, we note that BOC cut rates as expected on Wednesday. In the accompanying statement, the bank mentioned that excess supply in the economy continues to put downward pressure on inflation, and that monetary policy decisions will be guided by incoming information and our assessment of their implications for the inflation outlook. Overall, the tone of the statement tends to be leaning on the dovish side. The market expects the bank fundamentals to lead the way for loonie traders. As an epilogue, we expect the US dollar to maintain the initiative over the currencies in the FX market, mainly due to the release of the US inflation metrics for August. Yet, other currencies, such as the euro, could come under the spotlight, which in turn may enrich the trading mix. As for US stock markets, we note a uniform steep drop of Dow Jones, S&P 500 and Nasdaq, despite some stabilization near the end of the week. The drop signals that the bullishness of US stock markets seems to have been currently broken. We expect that both today's US employment report release and Wednesday's US CPI rates, both for August, could have an effect on the direction of US stock markets. Should the markets in the coming week have a more cautious approach, we may see it having an adverse effect on US stock markets and vice versa. As for gold's price, we know that the negative correlation of the precious metals price with the US dollar seems to have resurfaced in the past few days. The slight weakening of the US dollar seems to have been benefiting slightly gold's price. Also, the clear drop of US yields since the start of the week tends to enhance the positive effect for gold's price. At the same time, we also note that gold remains near all-time high levels, which may cause gold bulls cold feet as the precious metals price seems to be entering uncharted waters. We hope that you found this report useful, and from all of us here at IronFX, best wishes for solid trading.
All right, I bet you guys can see my screen clearly right now. All right, let's start today's advanced stochastics oscillator strategy. Okay, let's take a look. This is my profile. You guys can just be open and also type in the chat box. So we are looking at today's agenda. So we have an introduction of stochastics oscillator. We also have the best settings used for stochastics, and thirdly we have the secret strategies that institutions actually use and look at, and lastly we will be using stochastic oscillators to actually identify divergence. So what exactly is a stochastic oscillator? So some of the background of stochastic oscillator is that it's actually a popular momentum indicator developed in the late 1950s by George Lane. All right, we are also looking at it to be comparing the security's closing price relatively to its price range given or over a period of time. Sounds relatively close to moving average, but slightly different. All right, the oscillator does not follow the price and it does not follow the volume, but rather follows the speed or the momentum of the price. So that's one point that is very, very different from moving average. So we have a graph right here saying, seeing a stochastic indicator. You can see the bottom red color curvy line is actually how it would look like, how the stochastic indicator will look like to in comparison with the chart above, which is your regular training chart, right? So we are looking at its formula stating that percentage K equals to current close minus lowest low divided by highest high minus lowest low times 100. All right. We are also looking at, so stochastics has two components. You will have percentage K and percentage D, which is shown in the bottom figure. So because the fast percentage K can be choppy, we will be smoothing it by applying X period moving average. All right, therefore finding ourselves with a slow percentage K, and then to get the signal line, we smooth the data further by applying another X period moving average to slow percentage K, and now we have percentage D. So now we will be, in whole stochastics, we will be seeing two visible lines, which are the slow percentage K and the slow percentage D, which we see right here in the figure. So right in the figure, you can see the green wavy lines are your percentage D, K, and our dotted lines are actually our percentage D. So the best settings, or rather the default normal settings for stochastics used are normally 5,3,3. So you'll be seeing that these numbers will appear on the settings of the stochastics indicator when you are using any form of trading chart website, trading chart app. All right, so readings are more than 80 will indicate the price is near its high, and readings that are above 20. So readings that are smaller than 20 indicates that the prices are near the lows. So we have an upper bound and a lower bound kind of range thing. So we are looking at percentage 80 and 20. All right, the security that is overbought when percentage K moves above 80, and security is normally oversold when percentage K line moves below 20. I think it'll be more graphical once you get to see it. So we will look at it in a while. So some of the secret strategies that institutions use, or sometimes I do showcase in some of the webinars that we have had where I use stochastics as the indicator, will actually include the uncertainties of their estimates and analyzing how portfolio performs during a volatile and uncertain market. So we are looking at something that is called the hidden support and the resistance. So backtrack a little bit, we are looking at basically on this slide, we are saying that we are looking at highs that are 80 and lows that are about 20. So we are looking at these two as resistance and support. However, if you are looking at how the price reacts and the momentum it carries in the stochastic indicator, you can see that on these four red color highlighted areas, or rather price and reactions, are the peaks of the reaction, right? So we can see at the peak of the reaction, we are seeing that actually at the peak, we are looking at 93.52, way above than our normal range that we're looking at 80. So in this case, if you are stopping yourself or letting go of your buy in and letting go the price where it hits 80, in the range, that would be ignoring hidden resistance that are actually like 93.52, or it would cut short your own profit that you could have possibly made, right? So in this case, we can see that the 1, 2, 3, 4 touch points on the peaks of the graph. All right, so on the 4 touch points, they are all in line and forming a new hidden resistance of 93.52. So we are also looking at the actual chart of dollar franc in H1 time frame. We can see that it's a very nice upward sloping trend. We can also see that these touch points, I would need my pen. You can see that these touch points could also relate to the chart right now. Right, so we are seeing that these few touch point that bounces off or bounces off the upward trend line are also bouncing off your invisible support, which is at 4.2675, which is way below our 20 mark that we are looking at before. So you can see that. Let me just clear the drawings. Okay, so we can see that in this case, we can mark this 4.2675 as a support in our resistance. And in this case, we can see that over here, we are looking at a potential push up and stochastics, which also means that there is a likelihood of support that has been bounced off on the stochastics indicator. Okay, so this is what we are looking at identifying divergence. Sorry. In this case, oops, sorry. So for those that are familiar with divergence, I think that this slide will be much easier for you guys. But however, those that are not familiar with it, you can look at, first of all, we have a upward looking trend with higher highs, higher lows, and downward moving trend with lower highs and lower lows. So we can also see in this case that stochastic, how can they identify in terms of divergence, right? So in the first few slides, you'll be seeing, we did mention that stochastic is actually looking through pricing momentum, right? So you can see that in this case, it did reach the peak beforehand. However, there was a slight increase in the price point. You can see that price actually closed off higher than before. However, in stochastics, they can capture a lower momentum, which is really odd, right? Since the price actually did close higher than before, which is also an indication of a divergence, which in this case, we call it a bearish divergence. So in this case, after the bearish divergence, price indeed went all the way down to this level. So we can see that this also coincides with our hidden resistance level, which adds on to the divergence theory that we are looking at. And then we do see the support here. This is not in the slide, but you guys can also see it as well. So, and then price did bounce off the stochastic support that we are looking at, and also the pricing support that is also available over here, and did move all the way up. And then we are also capturing another bearish divergence at a higher price. So we can see that repeated pattern on the hidden resistance level of 94.98, and also a bearish divergence at the peak. In this case, you can see that indeed the bearish divergence carried over and price did slow down and dropped from the stochastics hidden resistance level, coinciding with our bearish divergence. All right, so that's pretty much it for stochastics indicators. I know that I did go through a slightly quicker. If you guys have any questions, do let me know what kind of questions you have. You have some time to key in the questions before we go into a live analysis. Okay, I see that there are no questions. Then I will be sharing my screen right now to the chart. Okay, do let me know if you can see my screen. Oops, sorry. Oops, sorry. I'm losing the chat box. Okay, you guys can also key in your Q&A or in the chat box. If the chat box is not working, do use the Q&A, all right? So let's go through some of our regular pairs that we go through in webinars. I mean, we can go through any requested pairs as well. That would be great. So maybe let's just start off with dollar franc. Let's take a look at the weekly chart. Hopefully you'll be able to use stochastics in this case as well. So we are seeing a overlap, support and resistance overlap. We are also seeing a key resistance level over here. We'll take the first closing price as well. So it'll be 1.00153. We're currently looking at a dollar franc weekly chart. All right, so let's look at daily. We can see that for now, we are looking on terms of the daily, we are seeing that price is actually moving in between these two price. So we're looking at 0.93 and 1.001. So this is a not, in terms of the daily chart, is not super trending. We are looking at a sideways moving kind of trend. However, if you take a closer look in the H4, you can see that it's moving down slightly. We are looking at a potential channel, I believe. Let's try out. Yep, we are looking at a downward moving channel. A bearish channel in this case. However, I would say that currently price is right smack kind of in the middle of the channel. A bit unsure. The market is a bit unsure of its goings, and we can see the price do react a fair bit on this level of resistance at this price of 0.94312. All right, this is something that for those that are carrying on with a dollar franc trade is a price point that you guys have to take note. It does seem that like the price has difficulty bouncing all the way up to the resistance that we have at this level. However, I think we do have to take a closer look on where it's going. It looks like on H4, it is still moving sideways with a underlying bearish momentum. Let's look at another pair. Maybe Aussie dollar. Okay, let's start from the weekly chart. Initially was a downward moving, maybe it's a channel. Hold on. Yeah, it was a downward moving channel, but you can see the price has broke out of the channel. For Aussie dollar, let's look at 1-day chart. Very obvious, very nice channel. On the 1-day chart, you can see the very prominent upward rising trend. Not a very nice trend line, so we'll leave it. Try to see whether is there any highs or lows that we can take note of. As of now, not much. Let's look at H4. Okay, so we are seeing a upward moving channel. Okay, so it has just dropped out of the bullish channel that we have just drawn. Has a momentum to go down. However, I would say that there is some area of moving downwards. However, I am seeing a bounce off in this area of support. All right, so I wouldn't say it's a very big movement. I would say do keep in view for this as well. So we can see that some price did have a difficulty pushing higher than 0.68. All right, so weird today. Today's FX pair seems a little bit odd. Let's do silver then. Okay, for silver, very obvious levels here in terms of support. Looks like it's an upward momentum for now. Let's look at daily. So on the daily, there's a upward moving trend line. Not a channel, but upward moving. So we are also looking at a potential support turn resistance price point over here. Looking at H4. Let me just redraw the trend line. Instead of a trend line on H4, it looks like a channel. Yeah. So in my viewpoint, I would choose to remove this. I am seeing another level over here instead. Seeing a upward movement bounce off. And I would like to keep my stop loss slightly closer. Okay, let's use our Fibonacci retracement. So we are looking at a potential bounce off in this area. Let's use our projection. Drawn wrongly. Okay, so 127.2 coincide with our retracement. Let's take a look at our potential take profit. Looking just nice at the candle wick range. Take a look at stochastics. So you can see that in this case, let me show the setting. The blue is percentage K and D is percentage D. And then we are looking at possible support levels. Resistance level. All right, so there's a chance where we can see a bounce up from here. Sorry, the support can be slightly lower. Right, so we are seeing that there's a chance where price will drop slightly a bit more and then we will bounce all the way up to our take profit. However, you can see that I'm paying out the resistance to be 96.21 and support to be 56.1. All right, this is what I am looking at right now. Sorry. Okay, I am looking at this as well, Ichimoku cloud. The way the lagging and span. So you can see that there's a chance where price is actually above the cloud and we are indicating a upward movement momentum. All right, this is our silver for today. Is there any divergence per se? I would say no, there's no divergence, peak and drop. So it's very natural, very coinciding with the price and the movement. All right, this is silver for today. Let's hold on. Okay, I think it's fine now. Let's look at gold. Very obvious support here. Previously was on a downward movement. Possible support and resistance blockage. So it's a support to and resistance moment. Let's look at the daily. Nothing much to be captured here. Let's look at H4. Well, there is something that I'm seeing a slight upward moving momentum for gold in terms of channel. You can see that there is a support term resistance level here as well. You can see that price did double twin top. Price is already heading for the support, in this case in stochastics. All right, so there's a chance where price would bounce off from this overlap that we are looking at. So in this case, I'm actually personally also thinking that maybe we should go for this. And then this one, in this case, I would and could put according to Fibonacci projection for our stop loss. Our 78.6 Fibonacci projection is also nicely in line with our buy entry. You could keep your stop loss higher if you want to. However, I think it would be just nice as it's slightly below the channel and it will show a lot of indication if it really exceeds that level in price. Price is also holding above our cloud. Okay, this is my take. Let me just add in a retracement. 61.8 as well. This is what I'm looking for, gold. All right, as of now, do we have any questions? I guess not. Let's continue moving. Let's do Kiwi dollar. Like a very nice downtrend on a big time. Let's hide Ichimoku for a while. It's a relatively flat downtrend that we are seeing. Some form of resistance over here. Completes a V-shaped recovery. Let's look at H4. Depending on how you want to draw, I would like to draw closer to current prices. This is what we are looking at, an upward trend on H4. We are also seeing a indication of support here. So many touch points for this. I would say this could go both ways in terms of moving towards a resistance on the bigger time frame, like on the weekly, the price actually move past that and move towards the bigger resistance of the downward channel. However, the smaller time frame, we are looking at a short-term upward movement. There is a chance that this is a Nike tick reaction in terms of this that we are seeing. So let's take a look. Similarly, like a Nike tick reaction, however, it has been played out back to here. So we are looking at this retracement with 38. Yeah, about there. Okay, so I would assume that if we ignore this historical resistance, let's just say, in this case on H4, it is here. It goes way back. Okay, then I will be looking at a probable upward movement. Sorry, my screen just went black. Hold on. Okay. We're looking at 100 at the bounce off point. One, 2, 7, 2 to be a stop loss. Let's take a look at Ichimoku cloud. Price holding up nicely above the Ichimoku cloud. Let's look at stochastics. We can see that stochastics indeed has reached the bottom. Looking at a very nice support line, very high chance of it bouncing all the way up. Okay, so we are looking at this bounce up and we are also identifying resistance over here. We can see that actually the real support for this resistance for Kiwi dollar is actually 12.88 instead of our 20. All right, this is what we are seeing for Kiwi dollar. Okay, let's move on to the next pair. Let's do unusual pairs like Aussie Kiwi. Let's do it on the weekly basis with an upcoming support here. Strong decline from the resistance here. Okay, let's look at daily. We can see a very, very strong down. So look at H4. I would say even though it is a downtrend, it is looking at a possibility of short-term recovery, short-term retracement. Let's take out stochastics first because I want to see is there any chance of divergence. No chance of divergence. We are still looking at a downward sloping even on the stochastics and a lot of close support levels. However, I do see that there's a chance for a small bounce up. However, I don't think it is worth the risk. Okay, anyone doing Kiwi Aussie Kiwi in the chat room? I guess in this case, we do not have any. So maybe let's just skip the pair. There's a Franken. Interesting. We're looking at resistance and support level. Let's look at daily. You can see that actually price is moving up and down between these two levels. H4. Very obvious. The nearest resistance we are looking at is here. Sorry. 148.757. There's a chance that price is actually making a V-shaped recovery back up. It was before that a downward moving. There's a chance that the price would exhaust in a while. And there could be a way better entry. So let's just take a look. It is indeed true that price has reached its resistance. Is something to be aware of. All right. So there's a chance that the burst of the bounce from the support of 142.986 has been exhausted. So I would say that it would be better if we take a precaution on coming back for the testing and bounce up again. So my opinion is that if there's a chance that it drops back down, we could go in from here and taking profit at here. So we're looking at a 38.2% drop back, looking at a 50% stop loss. All right, so this is what we are looking at. Let's see whether our Ichimoku cloud can give us some more information. Yeah, it did seem like a downward moving for this one. So Ichimoku cloud is slightly lagging as well. So we do have to see whether the price exceeds the cloud of actually come back down under. All right, so this analysis is something to be observed. I would say that we have to wait for the price to react to this current stage first before we could decide on any direction. Okay, let's look at another pair. Dollar CAD it is. No particular channel or anything, but there is a upward moving slope. So daily slope seems to be slowing down a little bit. Previously, it looks like it has had a head and shoulder pattern kind of things. Yep, did react up to it a little bit and then picked up the momentum again. Looking at a potential support over here. Let's look at H4. There's a upward moving channel. There's a chance that it would have dropped down with the exhaustion of the stochastics as well. Yep, very high in resistance level already. I'm looking at a potential downward movement. Would still want to keep my price within, as in my take profit within the channel. So I would put it slightly above and on the dot of the support, the resist of the channel, and my stop loss just right below as the support as well. All right, let's take a look. One, 100% for take profit, and we're looking at 127.2 for stop loss. Let's take a look right now for entry, 100% for entry as well. Very nice triangles. Yep, that's about it for dollar CAD. Do we have any questions? Okay, I guess not. Let's look at yen. Upward moving as well, resistance here as well. Let's look at daily. Let's change this to red. H4. Interesting. I think on H1 you'll see a slight triangle. So on H1, you'll be looking at this instead. Let's just do a small analysis on H1. Interesting, interesting. Looks like it's more of a downfall for the short term. And it is stopped a bounce up over here. CAD yen is pretty odd. Let's look at H4 instead. H4, you can clearly see that price has not reached its full potential in terms of resistance. still trying to climb upwards. I'll say for the short time being, it'll be pretty hard. However, if you're looking at a longer time period, you could see that there is a chance of bouncing up. However, it's not a very big entry. I would say the risk is not very worth it. Yeah. So in order to keep our take profit within the channel, we will be looking at more of the 1:1 in terms of stop loss and take profit, which I am not a very big fan of. Okay, we'll do one last one. All right. Let me think. Let's just do the XY. On the weekly chart. Upward moving as well, strong downturn after. Let's look at daily. So recently we're looking at a down drop. Let's look at H4. Yep, so looking at a downward fall for recent timings. Short-term downward, we can look at long-term upward, but let's do the downward first. I'm going in line with the trend line instead. Let's use our Fibonacci projection. 100% for the drop. Looking at 161.8 for a stop loss. %100% for the take profit as well. We are also looking at Ichimoku cloud in terms of price is below the clouds. We can also see that stochastics right now is at the resistance. We are highly likely heading for a drop. Very beautiful resistance for this case. This is what I am looking at for the XY. Seems to be an impeccable drop coming, I believe. Yep, I think that's all for today. Since you guys don't really have any questions, I will be seeing you guys next time. All right, goodbye.